I think, going to end up being the biggest bull market that we've ever seen in gold, probably bigger than what we saw in the 70s, which is, a tough act to follow. If you recall the 1970s, when gold went from $35 an ounce to 800. So I'm talking about something that potentially is going to be bigger than that. But the biggest bull market in history, accompanied by the most skepticism, the most bearishness. There is no greed. Gold's at a new high, and gold stock investors are scared to buy the stocks, right? Every time gold goes up, they think it just means it's about to get killed. And so that, I think, is a very good sign for the longevity of this market.
According to the World Gold Council, gold demand often spikes during global crises, reflecting its status as a trusted store of value. Gold has seen solid gains this year, up 12.5% year to date, and is expected to continue rising toward 2030. Historical data shows that gold has traditionally backed the international monetary system, even during times when the British pound was the world's reserve currency. This historical perspective strengthens the argument for gold's potential rise to $7,000 per ounce. Goldbug and founder of SchiffGold, PeterSchiff, underscores the US dollar's 2% drop to 107.5, suggesting its rally was deceptive. He predicts the current gold bull market could surpass the 1970s surge, driven by fiat currency devaluation, with gold nearing record highs at $2,771 and room to climb further. Since the introduction of the euro in 1999, the dollar's share of total reserves has fallen from a peak of 72% in 2001 to just 58% in 2023. When gold is included in this analysis, the dollar's dominance appears even less absolute. From a technical standpoint, Schiff calls silver a steal below $31 per ounce. He anticipates an explosive rally in the undervalued silver market. According to StoneX Financial, silver is set to outperform all precious and base metals this year, as its monetary status enables it to follow gold prices higher while also benefiting from the rising floor of industrial demand. Despite gold's strong performance, Schiff critiques the lack of investor attention on gold mining stocks. He notes that while gold has entered a bull market, mining stocks declined over 20% from their previous highs. Reflecting on 2024, gold stocks gained 10.64% compared to gold's 27.22% rise. The disparity stems largely from central banks buying gold, not gold stocks. Gold equities remain approximately 40% below their 2011 peaks, even as gold prices have risen roughly 40% since then. Investors who follow central banks when buying gold may finally recognize the strong case for gold equities. Now, we present the clips of PeterSchiff's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
The NASDAQ. But I think the big story on the week was the US dollar, gold. Nobody's really talking about that. The dollar index was down for the second week in a row. And this week was a big drop, about 2% drop in the dollar index. Now, it's still pretty high in the scheme of where it was before Trump was elected. We're about 107.5, but we got above 110 last week. So we're about 2.5% below the high. The euro is back at like 105 after being, I think, slightly below 102 when it hit the low. But we'll see what happens next week. I think if we get another drop next week in the dollar, I'll be pretty confident that we've seen the highs. And this whole move up in the dollar was a gigantic head fake just to get all the traders positioned the other way before they get the rug pulled out from under them. And that's what I've been expecting. Also, gold. Gold today, after hitting record highs just about every day this week in terms of the euro or the pound or the Canadian or Aussie dollars and a lot of other currencies, gold was going up. And it came to within $10 today, maybe even $7 or $8 of an all-time record high. We got up to just about 2,790-ish. And that's about the record high, maybe 2791, 2792. So we almost got there. And in fact, gold closed today at 2771, or for the week. That's about $20, less than 1% below its all-time record high, up 2.3% on the week. So about the same percentage as the Dow. But again, record highs in other currencies. Silver was up 1.4% on the week, not as much as gold. And it's still below $31. I think it closed around $30.60. That's the buy. I mean, you can certainly keep buying gold. It's going to go higher, I think. But if you don't want to buy at the all-time highs, which is basically where we are in gold, now the chances are these aren't going to be the all-time highs for long. And so most people who buy gold are going to be buying near the record highs because gold's going to keep rising. But again, it's not gold that's rising. It's fiat currencies that are falling, and they've got a long way to fall. So therefore, the price of gold in terms of those currencies has a long way to rise. But silver is what everybody should be buying right now, I think. I mean, it's a steal below $31. I mean, I think 30 is a support. I mean, it can get a little bit below that, and we've done that, 29 and change. But I mean, this is, I think, about as good as it's going to get in the silver market. People should be buying it. Remember, SchiffGold sells silver too, and they'll be open all weekend. You can go to SchiffGold.com and load up your shopping cart with a bunch of silver. The market's going to explode, I think. I mean, I think we're getting ready for it. Nobody's talking about it. Nobody's paying attention to it. But the fundamentals are great. Certainly, the gold stock investors are not paying attention to it, even though the gold stocks had a good week. And the GDXJ was up 4.75%. So a solid week. But if you consider where they are, this morning, these stocks needed to rally 18% to get back to their highs from October. That's like 3 months ago. And even with today's rally, they're still, 16.5, 17% rise from here to get back to where they were when gold was the same price as it is right now. I mean, gold is in a huge bull market, obviously. We're hitting record highs in every currency. We're about to hit a record high. I'm pretty sure that we'll hit a new all-time record high next week, if not on Monday, Sunday night. So record highs in gold. That is a bull market, right? Bull markets keep making record highs. The gold stocks are all in bear markets, right? They all dropped more than 20% from their highs, and they haven't recovered. So they're still in bear markets. So you have gold at all-time highs in a huge bull market, yet you have the gold mining stocks that should be the primary beneficiaries of the gold bull market, and they're all in bear markets. What does that tell you, right? Investors have got everything wrong, right? They're buying what they should be selling, and they're selling what they should be buying. They don't understand this gold rally. And
regarding the state of the economy, PeterSchiff points out the troubling rise in bankruptcies. He also points out that 10.5% of credit card users are only making minimum payments despite facing 24% interest rates. Schiff warns that this financial strain could lead to a surge in delinquencies. Corporate bankruptcies soared to a 14-year high in 2024, underscoring the catch-22 facing the Federal Reserve as it wrestles with interest rate policy to battle sticky price inflation. According to data gathered by S&P Global Market Intelligence, 61 corporate bankruptcy filings were made in December, bringing the total for 2024 to 694. This was a 9.2% increase over 2023 and the highest number since 2010 in the aftermath of the Great Recession. On the other hand, cutting rates more aggressively could revive the inflation dragon. Even with rates elevated compared to the decade after the 2008 financial crisis, we're seeing an increase in the money supply, which is, by definition, inflation. Powell and company are walking that tightrope, but stubbornly high price inflation and rising corporate bankruptcies indicate their balance is starting to falter. In addition, Schiff criticizes Donald Trump's view on interest rates, stating that the current 4% Fed funds rate is far from sky high. He argues that rates are low compared to historical averages before the 2008 crisis.
Bankruptcies are at a 14-year high. Now, how is that consistent with all this talk of a strong economy? We have a great economy, yet bankruptcies are at a 14-year high. Does that make any sense? You would assume that if the economy was really good, fewer companies would be going bankrupt. When companies are going bankrupt, it usually means that times are tough. So most bankruptcies in 14 years contradicts that narrative, as does credit card numbers. So the percentage of people who are making their minimum payment on their credit card And that's like you pay 2% of the balance, right? So, you owe $10,000 and you pay $200, right? The percentage of people doing that jumped to 10.5 about. That's the highest it's been in 12 years. Now, it could be higher for longer because the survey didn't start until 12 years ago. So in the 12-year history where they've been keeping track of this, this is the highest percentage of people who are making the minimum payment. Now, if the economy was strong, why would you make the minimum payment, especially with interest rates at record highs? Credit card interest rates are 24%. So if you are being charged 24% interest, I mean, that's kind of like a loan shark kind of thing, 24%, right? You'd want to pay off that credit card debt as fast as you can to avoid that 24% interest. But the fact that a record number of people are making the smallest payment possible tells you that that's the most they can afford. And they're stuck paying 24% on a huge balance because they don't have any money to pay it down. This would not be going on in a good economy. In a good economy, people would have more money and would be able to pay down the debt to avoid a 24% interest. And what do you think is going to happen next? Right now, people are making 2% payments. Pretty soon, they're not going to make any payment at all. I mean, first of all, what's the point? Why pay 2%? You're barely treading water. When you make a 2% payment, your balance doesn't really go down. You owe $10,000 and you pay 2%. When you get your next bill, the interest is probably the $200 you paid. So you're never going to get out of that hole. You're just storing your money away, right? So you might as well just stop making the payment. So that's going to happen. You're going to see a big surge in delinquencies in credit cards. So again, all of this is consistent with what I've been saying and what the BOTAs have been saying. That is, we have a weak economy. We don't have a strong economy. And unfortunately, it is going to get weaker. Anyway, so let me get to what Trump was talking about. One of the things he said right off the bat that I posted, he talked about the high interest rates that we have and how it's a problem. And he said that we have sky high interest rates, sky high. He actually said sky high twice. Now, interest rates have got a 4 handle on them, right? The Fed funds rate is in the 4s. Long-term treasury debt is in the 4s. How is that sky high? I mean, the president ought to know what sky high is. I mean, he's a real estate developer. I mean, he builds skyscrapers. 4% interest rates, right? Sky high. That's like claiming a duplex is a skyscraper. I mean, we're nowhere near the sky. If you look at where interest rates averaged, let's say, since the Second World War and up to 2008 financial crisis, we're lower than normal. We've got low interest rates. They're not even close to being high, let alone sky high. But Trump wants lower interest rates. In fact, he claimed that he's going to contact Powell and he's going to tell him to lower rates, or he's going to argue or try to persuade him to cut rates because he thinks they're too high.
Gold is experiencing its best start to a new year since 2023 and is on track for its strongest monthly performance since September. With gold and silver set for explosive gains, will investors seize the opportunity or keep overlooking precious metals and mining stocks? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.